Hello, my name's Charles Lastic. I'm the Managing Director of Blue Bond Tax Planning. I've been helping clients avoid inheritance tax for more than 18 years as an inheritance tax specialist. Today's video is about something you probably won't have heard of, which is called the Rysaffe Principle. Basically, this principle allows people who are investing monies into trust or gifting assets into a trust to reduce their long-term charges on the trusts. And bearing in mind our trust lasts 120 years, that could have some quite significant savings. So that's the Rysaffe Principle. So welcome back. So as I said, today's video is around the Rysaffe Principle. So what exactly is it? Rysaffe were a trust company who challenged HMRC on the usage of periodic charges over a long period of time, and they actually won. And this has been utilised for a fair number of years now. It basically says that if you set up different trusts on different days and put money into them, each of those trusts have their own separate periodic charge allowance. So what is a periodic charge? Every 10 years, if the value of a trust exceeds the nil rate band is for that trust at the time, 6% at this moment in time is chargeable on that value. So let's say you put £650,000 into a joint settler trust as a married couple. 10 years later, that 650,000 had grown to £1 million. You're effectively 350,000 over if the allowance hasn't changed at all. So therefore you would pay 6% on that 350,000, or at least the trustees would. So how does the Rysaffe Principle help? Well, if that same couple said, okay, well, what we'll do is we'll put smaller amounts into each of 3 separate trusts that we set up on Monday, Tuesday and Wednesday. So let's say, for example, they put £400,000 into their first trust. That trust has an allowance of 650 because it's a joint settler trust, right? On Tuesday, they've utilised 400,000 of their allowance. Now, bear in mind, if you give more than 650, there would be an immediate 20% tax charge, right? So they've given away 400,000. So they've still got headroom of another 250,000. So the second trust has an allowance of 250,000, right? But let's say they only give 150,000 into that trust. So they've still got 100,000 of allowance, right? So on the third trust, it's got 150,000 of allowance. They put £100,000 in. So altogether, they put in 400,000 plus 150 plus 100. Altogether, they've put in 650,000. They didn't go over their total allowance of 325 times by 2. But at the 10-year anniversary, what's the periodic charges allowances for all 3 of the trusts? Well, the first one's got 650, the second one's got 250, and the third one has got 150. So altogether, the allowances across all 3 trusts are 1,050,000, which is a lot more than had they just left it in one trust of 650. So you see the advantage on that 6% charge. Now, although a 6% charge isn't massive relative to £650,000, which probably over 10 years would have grown to more than £1 million, it can add up over the years, especially if people invest in trusts at a relatively young age, or their children leave the money in their trusts well after they've died, and so on. So it does have an impact, and therefore the Rysaffe Principle is worth looking at if a person's putting in significant amounts into trusts. Okay, thanks for listening. Hopefully that was useful. If it was useful, if you could give us a like, that would be great. Thanks very much, and bye for now. Bye.